Have you ever just stood at a busy shipping port or watched one of those massive freight trains roll right through your town and wondered, who actually owns all these massive physical structures? I'm Zach, and welcome to This Explainer. My mission is simple, to help everyday people build real, lasting wealth. And today, we're going to uncover one of the most massive, hidden wealth transfers happening right in front of us, deep within the physical infrastructure of the global economy. It's a phenomenon called the ghost infrastructure boom, and understanding it, well, it's absolutely critical if you want to build unshakable long-term wealth.
But seriously, think about it for a second. Who actually owns the literal choke points of the global economy? We live in a world that's practically obsessed with the digital space. Everyone's glued to their screens, trading virtual stocks, chasing the next big crypto coin, talking endlessly about artificial intelligence. But what if I told you that the entire digital and physical global economy is completely paralyzed without a hidden, physical layer of infrastructure that almost no one is talking about?
It's like we're facing this massive divide right now. On one side, you have the digital illusion, the flashy AI, the apps, the volatile virtual stocks. But on the other side, you have physical reality. I'm talking about ports, pipelines, rusting steel, and concrete. Look, if you're still viewing the economy purely through the lens of software apps and consumer brands, you are completely missing the foundation of the entire system. Without that heavy, grounded infrastructure, your phone gets no data, your grocery store has zero food, and the modern world literally grinds to a halt.
This boom isn't just speculation, guys. It's a verified reality. While mainstream media distracts everyone with daily tech stock movements, the smartest capital in the world is quietly buying up our supply chain arteries. And to understand how they build this immense wealth, we really need to grasp the concept of a physical choke point. See, in the digital world, if a website crashes, it's just a minor inconvenience, right? You refresh the page, maybe open a different app, but in the physical world, it is a totally different game. A physical choke point is a geographic monopoly. If a major port shuts down, global trade is legally and physically forced to stop. We actually saw this play out a few years ago when that single cargo ship got stuck in the Suez Canal. It halted billions of dollars in global trade every single day. The elite players aren't just trying to create product demand, they're buying the physical pathways that those products are forced to travel through.
You see, massive allocators, firms like Brookfield Asset Management, Global Infrastructure Partners, Macquarie, they know something crucial. A port is essentially a geographic toll booth. And these aren't your typical smash and grab private equity firms. These are institutional giants managing hundreds of billions of dollars for pension funds, sovereign wealth funds, and huge university endowments. Their strategy is entirely long-term, extremely defensive, and honestly, incredibly smart. When these funds buy a port, they aren't just buying a parking lot for boats. They're buying a highly regulated, massively expensive piece of real estate that legally forces every single shipping company in the world to pay a toll just to use it. It is a mandatory fee system. They secure the choke point and they just collect the rent. Forever.
Look, one of the biggest fears for everyday investors is inflation, right? It just silently eats away at your purchasing power. But these infrastructure funds, they use a literal mathematical shield against it. The contracts that these ports and pipelines sign with their customers are explicitly tied to the Consumer Price Index, or the CPI, meaning if inflation goes up, the toll that the port charges the shipping company goes up automatically. If inflation spikes, the fee the pipeline charges the utility company rises right along with it. It's a brilliant, legally binding shield. They actually turn inflation from an economic negative into an automatic cash flow positive.
Now, you might be sitting there thinking, Zach, pipelines and ports are dinosaurs. I only want to invest in the shiny AI future. Well, here is the massive plot twist. When a massive tech giant wants to build a new artificial intelligence data center, it doesn't just run on cloud dust. It requires an astronomical amount of electricity and cooling power. We're talking immense regional power grids, high-capacity natural gas pipelines just to feed the power plants, and massive water treatment facilities just to keep those servers from melting down. And guess who is actively buying up all these physical assets? Yep, the exact same infrastructure funds. They are building and owning the very physical foundation that the digital revolution absolutely needs to exist.
What they are doing is creating a dual monopoly, owning both the physical tracks and the digital cables. Verified public records actually show these funds are laying fiber optic cables right alongside their railways and highways. Think about that. They own the physical tracks that move the heavy cargo, and they own the physical glass cables that transmit the internet data. They are literally wrapping the entire global economy in a layer of toll booths, cashing in on the old industrial world and the new tech era at the exact same time.
So, you might be asking a very logical question right now. Why doesn't everyone just do this? Why not just build a competing pipeline right next door? I mean, if a pipeline is just sitting there printing money, basic capitalism says a rival should just lay their own pipes right next to it and steal the customers, right? Well, not quite. Heavy industry involves massive economic and legal friction.
Here is the real secret, the invisible moat of red tape. To build a competing pipeline or a new deepwater port today, you were looking at decades of permit approvals, thousands of pages of grueling environmental impact studies, painful local municipality approvals, endless legal challenges, and billions in upfront capital. And guess what? The massive institutions absolutely love this friction. Those massive time and legal costs act as an unbreakable barrier to entry. Once an infrastructure fund owns an asset that already has the proper permits, it's practically impossible for a competitor to replicate it. They essentially buy the legal right to be the only game in town.
I know what you're thinking. Zach, I don't have $3 billion lying around to go buy a shipping port. The good news is, you don't need it. Here is the exact step-by-step framework everyday investors can use to copy the smart money and position your capital on the side of the toll collectors. Step 1. Look into public infrastructure real estate investment trusts, or REITs. These are publicly traded companies that own things like cell towers, fiber networks, data centers, and physical logistics hubs. Step 2. Investigate publicly accessible global infrastructure funds. A lot of the massive institutional firms we just talked about actually have publicly traded arms that let everyday folks like us buy in. And Step 3. Hold these assets for long-term defensive wealth. By following these steps, you're aligning your strategy with the biggest sovereign wealth funds on the planet.
And honestly, here is the absolute beauty of this entire system. 0 yards of concrete poured. Literally 0. When you use this passive strategy, you are effectively acting as the toll collector. You collect rent and dividends from big tech giants, shipping companies, and railways without ever once having to negotiate a union contract, file a massive environmental study, or pour a single yard of concrete yourself. You let the institutional managers do the heavy lifting while you sit back and benefit from that geographic monopoly.
Remember the core principle we always talk about here at Zak Invest. The goal is to get rich permanently, not quick. This strategy is definitely not about chasing the next overnight meme stock. It is about building an unshakable financial fortress for yourself. These physical assets, they don't just go to 0 when a tech bubble bursts. People are always going to need to eat, so ships will always need to dock. People are always going to use their phones, so data will always need to flow. By doing this, you are capturing the most essential cash flows in the world.
I want to leave you with this final thought today. Stop looking at the economy through your phone and start looking at the physical supply chain. The very next time you see a massive freight train rolling through your city or a cargo ship out on the horizon, I don't want you to just see traffic or noise. I want you to see the verified, tangible reality of the ghost infrastructure boom. I want you to see a wealth-building system that you can finally participate in. Understand these choke points and invest alongside the toll collectors. The digital world might be the flashy future, but the physical world, it holds the keys. So ask yourself, what piece of the global choke point are you going to own tomorrow?